Hey guys, welcome back to Underdog Investor. Big news, China's inflation just turned negative for the first time in over a year. That's a huge red flag for the world's second largest economy. Let's break it down. In February 2025, consumer prices dropped 0.7% compared to last year, way worse than economists' forecasts of just 0.4%. That's a sharp reversal from the 0.5% increase we saw in January. Meanwhile, factory prices, still in the red. Producer prices fell 2.2% year over year, marking 29 straight months of declines, a sign that China's economy is still struggling with weak demand. Even Beijing is feeling the heat. They've lowered their inflation target for 2025 to 2%, down from 3%, showing just how concerned they are about deflation. So, what's next? March will be crucial. Once the Lunar New Year distortion fades, we'll get a clearer picture. But China isn't waiting around. They just set an ambitious 5% growth target and are rolling out fresh stimulus measures to boost spending and reignite growth. The big question, will it work? Can China escape deflation and revive its economy? Investors, keep your eyes on this. Because what happens in China won't just stay in China. What do you think? Drop your thoughts in the comments. And don't forget to like, share, and subscribe for more market insights. See you next time.